by taking this page from this table from an IMF report, it puts Korea in a global perspective. The GRE means government-related enterprise. So these are the state-owned companies, and the situation in Korea is that since the global financial crisis, these corporations have ramped up their debt. Some of it was part of a quasi-government, quasi-fiscal stimulus program. In another case, it was to alleviate inflation or mitigate inflation pressures by not allowing KEPCO to raise tariffs, so that KEPCO needed to fund itself instead of from revenues through debt issuance. But where we see in Korea is that as a share of GDP, it's actually quite moderate. In fact, the countries that have a higher amount of debt, public sector debt, non-central government, that is, non-general government debt as a share of GDP, tend to be rated higher than Korea. This red here, this actually comes from a report on a Middle Eastern country, and in the Middle East, those countries are rated AA2, UAE, and well, Dubai doesn't have a public rating, UAE, and rated higher, but they can manage the debt. That's the whole thing. So it's not just the debt stock in our analysis, whether it's state-owned enterprise debt or general government, which means central government, national government debt, but whether the debt can be managed, the refinancing risks are low, and if it can be financed in a safe and prudent way. Speaking of this, let me just round out the perspective on the state enterprise debt, because when you're really, state enterprise debt is not debt that's being financed by taxpayer revenue. It's off the balance sheet of the government. It comes on the balance sheet when the state enterprises lose money, or else when they perform a public policy role, and so the government transfers resources on a regular basis to the state enterprise. And so when we look at and I should say in the case of Korea, even though the debt has grown, and it's probably a bit higher than it grew again in 2012. Those figures are 2011. So Korea probably moved closer to those red bars relative to other countries. But the Korean government has never had to take on debt onto its own balance sheet from the state-owned enterprises. It had to do that after the Asian financial crisis, from the bank recapitalization exercises. Once the bonds that were issued by Campco and KDIC were maturing, then they went back on the government's balance sheet directly, so that taxpayer revenue from taxes was going to service this debt. But that's not the case yet, and we don't think it will be in the case of the state enterprises, as long as the economy can keep on performing well.